Welcome back to the channel, everyone. Today we are taking a deep, disciplined, and long-term focused look at Applied Digital Corporation, trading under the ticker symbol APLD, a company that continues to attract growing attention across the market while still being widely misunderstood by many participants. And before we go any further, make sure you hit the like button, subscribe to the channel, and turn on notifications because this channel is dedicated to detailed, long-form educational stock analysis that focuses on understanding risk, structure, and opportunity rather than chasing short-term hype. And now a brief but important disclaimer before we continue. This content is for educational and informational purposes only. It is no financial advice or a recommendation to buy or sell any security. Investing in the stock market involves risk, including the potential loss of capital. Past performance does not guarantee future results. And viewers should always conduct their own independent research or consult a licensed financial professional before making any investment decisions. With that clearly stated, let's break down why Applied Digital Corporation represents a developing digital infrastructure story rather than simply a speculative trade. Because while APLD is often casually grouped into crypto-related or high-volatility categories, the company has been actively and intentionally repositioning itself toward becoming a next-generation provider of digital infrastructure focused on high-performance computing, artificial intelligence workloads, and scalable enterprise-grade data center capacity, which is an important distinction because artificial intelligence is not a short-lived trend driven by marketing narratives, but a long-term structural shift that requires enormous amounts of power, specialized facilities, long-term planning, and significant capital investment. And this infrastructure layer is where lasting value is often built over time rather than in short-term application cycles. And Applied Digital has been working to align itself with this reality by expanding power capacity, developing purpose-built facilities, and shifting its strategic focus toward institutional and enterprise customers rather than relying on narrow or cyclical revenue sources, which helps explain the current behavior we're seeing in the stock, where retail investors have been aggressively buying shares based on AI-related headlines, momentum, and recent price movement, while large institutions appear to be watching closely, but remaining patient as they wait for additional confirmation in the form of long-term contracts, recurring revenue visibility, and consistent operational execution before committing significant capital. And this difference in behavior between retail enthusiasm and institutional caution is not unusual in emerging infrastructure stories, and often creates periods of elevated volatility where price action can move sharply in both directions, even as the underlying business continues to develop beneath the surface. And it is also important to understand that companies operating at the infrastructure level are not typically valued on short-term earnings alone, but rather on their ability to secure long-duration agreements, efficiently monetize capacity, manage capital expenditures responsibly, and demonstrate reliability at scale, meaning progress may sometimes appear slow to short-term traders even as long-term value is gradually being built. And this is precisely where many market participants lose patience while longer-term capital continues to monitor execution. However, none of this eliminates risk, because Applied Digital remains a high-growth, capital-intensive company that faces execution risk. Financing considerations, exposure to broader market sentiment, and sensitivity to macroeconomic conditions such as interest rates and overall risk appetite, and failure to deliver on timelines, control costs, or convert interest into signed agreements could result in downside pressure on the stock, reinforcing the idea that APLD is not a stock to blindly chase based on excitement alone, but rather one that requires careful evaluation, disciplined position sizing, and a clear understanding of individual risk tolerance. And when discussing potential price targets, it is essential to frame them as scenario-based outcomes rather than guarantees, because in a more conservative scenario, where Applied Digital continues to execute steadily, demonstrates operational stability, and gradually improves revenue visibility without major upside surprises, the market could reasonably support a valuation that places the stock in a longer-term range of approximately $45 to $55 per share as confidence builds around baseline execution, while in a more constructive scenario where the company successfully secures meaningful enterprise or institutional AI-related contracts, improves long-term revenue predictability, and proves its infrastructure can support sustained high-performance computing demand at scale, the stock could justify a higher growth multiple that supports potential price levels in the $65 to $80 range over time. And in a more optimistic long-term scenario where institutional participation accelerates, long-duration agreements are announced, power capacity is efficiently monetized, and Applied Digital is increasingly viewed by the market as a core infrastructure platform within the broader AI ecosystem rather than a speculative niche name. Upside scenarios above $90 and potentially into triple-digit territory over an extended time horizon cannot be ruled out, although it must be emphasized that such outcomes depend heavily on execution, capital discipline, competitive dynamics, and broader market conditions. And on the downside, it is equally realistic to acknowledge that setbacks, delays, or adverse market environments could result in meaningful drawdowns, which is why patience and risk management are critical when evaluating stocks in this category. Yet, when viewed through a long-term lens, the risk-to-reward profile remains compelling enough that Applied Digital continues to stand out as a company operating at the foundational layer of one of the most significant technological shifts of this generation. Because, historically, the largest market re-ratings tend to occur when perception lags reality and institutional capital transitions from observation to active participation. And while short-term price fluctuations will continue to reflect sentiment and speculation, the true valuation story will ultimately be written over quarters and years through execution, contract flow, and capital allocation decisions. So once again, if you found this in-depth analysis helpful and want more content like this, make sure to like the video, subscribe to the channel, share your thoughts on Apld and your own scenario expectations in the comments below. And always remember to stay disciplined, stay informed, and focus on long-term strategy rather than short-term noise.